Hello and welcome to What I'm Buying This Week with the Unemployed Value Degen. And what a week it was. We had, it was not an aggressive week. There was a lot of chop back and forth up until Trump announced his pick for the new Fed chair, Kevin Warsh. And the markets had a huge movement on Friday. And I'm even surprised that the fear and greed index isn't further into fear. If you look at Friday's behavior, you had large growth selling off 2.5 percentage points. And that's on top of the underperformance it's had. So if you go back for a month, you'll have small value up 5, large growth down 2. You go out 3 months, small value up 10, large growth down 5. It's a 16 percentage point outperformance between small value over large growth for the last 3 months, which is a pretty powerful trend. But the Fed chair appointment has the power to change trends. And I want to go look and see which trends were still intact. If I go to Fidelity's sector performance, on Friday, you have consumer staples up a full percentage point and a third, which is pretty shocking. But materials was down almost a full 2 percentage points, and information technology sector was down a percentage point and a third. So you had a huge sell-off in tech and materials on Friday. And now materials was a bit of a surprise. I had expected the metals to be stronger than energy. But if I go now on the year-to-date, I have energy up 14.33% and materials up, 8.2%. So I thought metals would outpace energy. I thought energy was maybe a 2027 story. And I was wrong about that. Energy's been coming back, with a pretty furious vengeance. On the metals side of things, so Kevin Warsh is perceived to be, more hawkish than a lot of Trump's other potential picks for Fed chair. And on the announcement, you have the dollar index. The dollar index regaining. So the dollar index had been on a bit of a recent sell-off. If we zoom in here so you have, this is going on 2 weeks now, from the 19th was the last local peak. So the dollar index has been selling off since the 19th. And it reached a low on the 27th. But you have this now sudden dollar strength, and that's corresponding to this interest rate also picking up a little bit. So the 10-year treasury is kind of it looks like it's been breaking out of its sideways channel, moving a bit to the upside, and that has the power to put some pressure on the market if it gets to about maybe 4.5%. But the S&P 500 overall, it doesn't really look that bad. It's been moving higher in a channel. Attempts at a sell-off, so the intraday moves. Let me zoom in on some of these intraday moves. So on Thursday in particular, intraday, there was a huge sell-off in the S&P 500, but dip buyers came in and they bought it back up. And a lot was happening this week, along with the announcement of the new Fed chair, was also Microsoft and Microsoft's earnings and Meta's earnings. And that was also a bit of a drama this week. Microsoft, I think, was down a full 12% on the day. But the S&P 500 overall was able to bounce back. And then on Friday, the announcement of the Fed chair, all of these intraday moves closed above the moving averages. So it's not really a sell-off. Let me go and take a look and see what does Microsoft and Meta look like. Yeah, that's a pretty serious gap down. I think that was somewhere in the neighborhood of $400 billion of market cap erased, from a $3.5 trillion company to a $3.2 trillion company. That is a huge move for Microsoft. And then for Meta, they had the opposite reaction. And what was interesting about Meta is, if you guys remember a few years ago when Zuckerberg was spending too much in the metaverse, it was the announcement of CapEx that caused the stock price